Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 4th day of March 2015, and this is the daily report for gold and silver. We do have moderately lower pricing across the board in the precious metals today, with gold leading the way in terms of percentage drawdown, currently off about $4 or $5 on the day. More importantly, below 1200, 1199.32. That is the current print on the screen. It's at a low of 97.70, so we're near the low on the day, and a high of 1208.30. Silver also trading lower on the day, but it is trading off about a nickel. Low 1603, so still above 16, high 1629, currently 1617, 1618 in that area. As I said, puts it off roughly 5 cents on the day. We'll touch on silver in a little bit. So traders, as we take a look at this decline today, as I said, off roughly $5 on the day, well below 1200. The interesting fact is that in just normal trading, meaning if we remove strength or dollar weakness from the equation, we've actually got gold trading nominally higher, up about $1.85 on the day. However, a decrease in price, and this is due to our strengthening dollar, we're going to put that chart up in a second, actually has taken away $6.85 in terms of the current price of gold, and that's where we're getting that -5 on the day. We've actually got almost a $2 bump to the upside, dollar holding it down and then taking it underwater. And traders, this is what I'm talking about. We have been looking at this chart for quite some time. It is simply a weekly chart of the dollar index. It's a basket of currencies against the dollar. We talked about the fact that we had this really almost straight parabolic rise up, but once we hit roughly 96 on the index, we started to back off, or just before I should say, 96 being roughly in this area here. And backing off, it actually backed off to just above 93, as you can see. And then over the last 2 trading weeks, we really got a resurgence in terms of this dollar moving up, especially against the euro. That's been strategically the currency that's really been harmed the most in terms of a loss in value. But last week, tremendous rise in the market. That's this green candle here. And then, of course, this week, even though we're only at Wednesday, we have already taken out the former high that we had reached back, call it the end of last year, beginning of this year, right in this area. And we are now surging at a new high. Has to be at least a 3 to 5 year high on the dollar, but the dollar's been surging, and that's the reason we are seeing gold especially under significant pressure today. Traders, oil is also looking at some sort of potential comeback here. We certainly are not near the lows that we were at when the market was trading roughly at 42 per barrel. That's right in here on a monthly chart. You can see this being March already, we've had a significant gain, not near the highs really of February, but nonetheless, we've got green candles, and green candles is significant when you consider the market breaking down from about July of last year. Each month showed a steady decline in price until, of course, we reached the bottom of this market, or at least tentative bottom, because, of course, we could see this market move lower. We've seen it move lower back in 2009, but nonetheless, it has moved up slightly off of that, and it is over $50 a barrel, so we absolutely want to keep our eye on that. And traders, lastly, before we start looking at some precious metals charts, of course, I do want to take a look at the equities markets. This is the Standard & Poor's, the E-mini 500. We hit record tops in the E-mini, over 5,000 in the NASDAQ. We're still above 18,000, I believe, in the Dow, although it has come down off of the last couple days. But what we can see is, if you notice, as this market moves up, we get this rounded top. Here, not so much. I would call this a tower top. Which is a candlestick pattern, of course. But here we're getting that rounded top again. And to me, it is significant in that, yes, we are backing off, but I don't see a imminent correction. I could be wrong, and Lord knows I have been, but I don't see an imminent connection. Look at how the market came and hit these lows today and moved back off of those. So we'll have to see what the equities markets does. We do know one thing, and that is that dollar continues to barrel and barrel ahead to higher pricing. So traders, what are we looking at the precious metals, specifically gold? Go back to our daily chart because a lot of information absolutely can be gleaned from this. If we take a look at this most recent big rally, and I'm talking about November, takes us up to from 1130 up to about 1230. We get this correction down to about 1160. And then the market, of course, moves back up. This has been the high and the highest we have seen the precious or gold prices in quite some time. Now, when we do that, we have our fib levels that are in there. We know that 1200 is a pretty critical number. Absolutely a crossroads area. It matches up in a harmonics to a 61% and to a 76%. Now, when we look at this market, look at this chart, take a look at this particular area. Absolute resistance. This is when that market hit 1130 and began to trail back up. Absolute resistance. It pops up above it. It actually cannot hold it. And then we get a pretty dynamic rally. Once again, this rally cannot be held, and it really tracks under. And you can see even here, you've got this area as being a real resistance area. That, of course, ends once we get this sizable breakout. And this breakout here at about 1217 is also, when we looked at our compression triangle, which existed at the time, that 1217 was that breakout point. So we got a dynamic move above. Then we have seen really this market do nothing but meander back to lower pricing, intraday lows at 91. So when we look at it in terms of a big picture, we are still looking at a series of, let's get my drawing tool out, higher lows. And we still have gotten higher highs. However, we got an absolute breakdown in this area in which we saw the market had the potential to move up, but it really stalled at this 1221. So my sense is that the bullish scenarios are not completely washed out, but they are absolutely put into, call it the back pages of the book, so to speak, because what we have noticed over these last couple of, call them micro rallies, so to speak, is that they were unable to take out certain areas after 3 days of ascent. We really got this market coming down hard, then hits this support level. We get this rally here, runs into a brick wall at 21. And once again, we see it come down, although it took 3 days in this case for the market to come down rather than 1 day. But here we see it going through two different levels as opposed to here, where we had resistance right at 21. Here it had come through 21 on the way down. So what that tells us is, traders, there's no other way to put it, but we're at this crossroads with the potential and probability to the downside exceeding the potential and the probability for this market to move higher. The reason I'm looking at the markets at this point in this way, well, one, the retracement's undeniable, but two, the lack of a recovery is undeniable. We had some real shots here where the market could have gone up and rallied. It fizzled out, it faded, and when we look at the fundamentals at play, meaning dollar getting stronger again, equities markets moving higher again, and oil trading under pressure, although it's come up over the last time period off of, $10 higher off of those lows at 43, it's still at $52, $51 a barrel. It's not at 90, it's not at 100. It's a different scenario, it's a different makeup. Now, when we take into account all of those activities, we have a fundamentally bearish potential in the market. Then when we take a look at the technicals in the market, and these of course are our longer term technicals, this is that crossroads that I talk about that's so critical, because the one thing that we have seen in this rally, was that for the first time in years, we actually broke above this resistance line. And this is, of course, just simply drawn from these tops, lining them up to these tops. But we had a genuine breakout and absolutely lack of follow through. We are once again right at this particular point, and I believe that a break below this will be a break in which we'll see this market test at least 1160, if not the former lows, which is around 1130. And traders, in the same way that we saw gold have some pretty serious failures, we've seen that also in silver. You can see this bottom here moves up, unable to break out above 1683. That would have been where resistance came in. You can see these tops, and then it begins to move back down. It's below 1632, which is a 50% fib retracement. It's a retracement simply looking at this particular rally from 14 up to 1850. And right now we are pegging real support, long-term support below $16 at around 1585 to 1590 in terms of the area. That's a 38% retracement, comes in at 1581 on this chart. So we're not in that same kind of a critical area technically as we are with gold. However, I believe that they have been trading pretty much in tandem under pressure. Markets moving higher in tandem and lower in tandem. Probably 70% of the time, trading time, we have that correlation going on between gold and silver. So pressure in gold is going to be pressure in silver. We are going to remain flat. We have no open positions in the market. I am looking to see if we can find some support in gold at around 1200. If we can see that support in gold and we start to see it rise back up, we will probably look to enter a short position in the market if it reaches anywhere near 1620, the top end of the range, or enter a short position if it breaks hard below the 1198. That is my current thinking and strategy. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.